Hello traders, and welcome to my video on common gaps. In this video I'm going to teach you how you can use gaps in the market to capture moves such as this one for over 200 pips and this one for over 100 pips and counting. Okay, so what is a common gap? Very easy to identify on your chart. What we're looking for is a price that has opened away from the close of the previous candle. So I'm using an indicator here in the MT4 platform that automatically shows you where there are gaps in the market. So you see the blue dot there shows us that there's a gap up. You can see where this candle closed and where this candle opened. So that's a common gap. Okay, there's a red dot here which shows us a downwards gap. This is where this candle closed and then the price opened below. Okay. Another gap here. Can you see this blue check mark where price opened above the close? Again, a common gap. So this indicator was free. I found it online. I just searched for a common gap indicator MT4. You can probably find an indicator for the trading platform that you're using. Otherwise, you can identify gaps yourself just by manually looking at the charts. They don't happen often, but when they do occur, they can give you potential entry or exit ideas. I wouldn't just trade them as they are. For example, if I see a gap up, I'm not going to place a buy trade, or I'm not going to place a sell trade thinking that the gap's going to close. I mean, that's one of the theories a lot of people use. If they see a gap up here, for example, they'll say that the gap should close. Okay, so that's short. And vice versa. If there's a gap in the opposite direction, let's just find a gap down. So if the price opens below, like it did here, they say that the gap will close to the upside. Okay, it will work sometimes and other times it won't. It's personally not something I would trade. If I was trading gaps that way, I would just trade the market from when the Forex market closes on a Friday to when it opens on a Sunday or Monday, depending where you are. So basically the weekend gap, which is a completely different strategy. Yeah, so there can be big gaps on the weekend, and some traders do, if say price opens, I don't know, 50 pips below the close from Friday, some traders might look to place a long trade and hope that that gap closes. Bearing in mind that spreads can be quite high when the market opens, so that can eat into profits when trading that particular strategy. But for the common gaps, for the purpose of common gaps, I wouldn't really use them as entry or exit criteria myself. I mean, they are what they are. They're gaps that happen. They are common, as the name suggests. If you do want to know one way to trade them, this is what I would do. So I would first look for a trend. Okay, you can see a nice level of resistance here. Triple top candlestick pattern. Okay. Our support here. Support is breached. That would have been a good trade on the breakout there. Could have placed our stop loss above this area somewhere and trade the breakout there. The market's making lower highs. Some bearish candlestick patterns, such as 3 inside down. I do have lots of videos on candlestick patterns you might want to check out. It's good to be aware of them. I think they can be great for timing your entry. So yeah, this is not really related to the common gaps, but I'm just showing you because it'd be wrong for me not to show you the ideal entry into this particular trend, which could have been on the breakout there. Okay, as the trend continues, if you see this ledge here and then a nice breakout to the downside, that could have been another entry. Same with there. And if you notice, there's actually, well, there is a common gap identified there. So one may say that, okay, price is open below the close, the market's going to potentially fall. And if you sold on that downwards gap there, it would have been a good time to get into this trend. I just think that's a coincidence, and I wouldn't have used that as my entry criteria personally. I would have waited for this pullback to complete, the level of support to form, and then a nice breakout below. You can see that support then becomes resistance here, and price continues to move down. Okay, another entry there on the breakout, no common gaps in sight. It's a common gap there. This one here, a gap down. But this is why I don't trade them as is, because you're not going to sell after this big down candle. You're going to expect a pullback first. So it would be much better to wait for this pullback to occur. Okay. Then you can see this level of support that's formed here becomes resistance on the other side as price continues to head downwards. Again, bearish candlestick patterns. There is an up gap here, which would have been a good entry point. I just think, again, that's coincidence. It just happens that ties in nicely with this downtrend, and which we could have entered based on support, even on the pullback up here, depending what indicator you're using or candlestick pattern to time your entry. Okay, and we continue down, another up gap here. To be fair, a potential entry point. I mean, after that big gap there, you can expect it to close, and it does close. Even as a short term, just zoom in here, even as a short term trade, that gap closed. Okay, it's only 4 pips, and I mean, after, that's another thing about trying to trade common gaps, like the close of the gap, because 4 pips, I mean, this is a euro dollar. The spread's going to probably be anywhere from 0.5 to 2 pips, depending on your broker. I mean, let's just go worst case scenario, 2 pips. 2 pip spread, and then maybe, I don't know, another pip commission. So that's 3 pips. I mean, if you're going for 4 pips to close the gap there, you know, you'd be lucky to break even. And not to mention, with a 4 pip target, you'd need a stop loss. Well, your risk reward is going to be terrible, because your stop loss will have to be greater than 4, and you could even be taken out, you know, with a 1 pip swing in the opposite direction. So I wouldn't close the trade in the gap in that way, but instead I would have saw that gap, and I would have waited for the pullback to complete, and perhaps traded on this breakout here. Even this ledge up here could have been a potential entry point. This is the 1 hour chart, so that would have looked like a lot more substantial, this level of support, if you were, say, trading the 5-minute chart. I personally prefer the higher chart time frames, just because I find the signals more reliable due to the fact that there's more data included within them. But gaps do occur on all chart time frames. But yeah, higher chart time frames mean less time chart watching and more reliable signals. From my experience, there's a gap there. Okay, that's a downwards gap. Again, it did close to the upside, but what we looking, 2 pips. I mean, you know, that wouldn't have covered your spread. Okay, it did have a nice rally upwards, but looking at the overall picture, lower highs, you know, level of resistance here, actually had a breakout there. I probably wouldn't be buying here, especially when I zoom out and I see the overall trend is in a downwards trajectory. Okay, so actually a nice entry into this trend at the moment. If you can see, if you would have traded that breakout there, we would have been in for some good profit. Okay. Even though that is, some may think that is selling very low, you can see the price is running away there, and you could have had your trade locked in at break even, and this could be a free trade. Okay, but ideally you want to get in at the start, so up here somewhere, you know, over 350 pips profit. You can trail your stop loss above the highs on the way down, like here and here and here and here, here. If you got that initial entry now, you would be in a really good position. You could have perhaps closed some of your position on the way down. But anyway, back on topic. Common gaps, easy to spot on the chart. I personally wouldn't use them for entry or exit. It's just knowledgeable to be aware of them, in my opinion. And if you insist on trading the gap, you might want to look at the weekend gap trading strategy for Forex currency pairs. Okay, hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more, and I'll catch you on the next one.